Hello, everybody. So this is Tiana, and I am from Gold Star Tax Service. And I know I promised you guys the W-4 video. I have that ready to go. I do want to go ahead and get that out. But I did want to take a quick second to go over a couple of things. As you can see here, the 2020 tax brackets, standard deductions, and exactly how taxes work, because I do see that a lot of people don't even know how taxes work. They just know they work. Taxes are supposed to be taken out. They don't. They owe. They don't know what they're gonna be. Like, people just don't know what taxes entail. Like, what are they? What do we do with them? Okay. So I want to explain this because it's not just about filling out the W-4. I want you to understand it's more than that, because you can fill out a W-4. I can tell you exactly what to put on it and you can fill it out, but still not even know why. And I think it's important that people understand why. Okay. I also wanted to see if I could turn off the sound. Okay, my sound shouldn't be on. Okay. So with that being said, let's go ahead and jump right on in. Okay. So 2020 tax brackets and standard deduction. Okay. How do taxes work? Now, your standard deduction is what it does is it lowers your tax liability of your total income. So the amount from your income that you don't have to pay the taxes on. So what I mean by that is, okay, your standard deduction is calculated by your filing status. Okay. Now, also, they have increased the standard deduction from 2019 to 2020. So when you do file your taxes in 2021 for the 2020 tax year, you'll see that it has increased if you already know what this is and what I'm talking about. Okay. Now, single married filing separately is $12,400. Head of household is $18,650. Married filing jointly is $24,800. And also, if you're 65 older and blind, okay, you get an additional $1,300, right? So example, if you're head of household, your standard deduction is $18,650. So what I mean by it is deducted from your total income. So your total wages, let's say it's $100,000. The standard deduction for the head of household right here is $18,650. So your total wages minus your standard deduction is $81,350, meaning that $81,350 is your taxable income. So you don't get taxed on the full amount, okay? You don't get taxed on the full amount. Only what after deductions and all that is when the amount that's left is what you're taxed on, okay? So that's how we pay taxes. And I hope you're staying with me, okay? Now, the tax bracket, based off your income, you're taxed off of that rate. So wherever your income level is, that's determined by what tax bracket category you fall in, the percentage of amount of taxes you have to pay. Okay, so your tax bracket depends on your taxable income and your filing status. Okay, so like I said, as far as your total income and your filing status, okay, whatever category you fall in. I'm going to show you that chart right now. Okay, so being in a certain tax bracket based off your income doesn't mean you pay federal income tax on your total amount of income. So again, this just says that if you make $100,000 throughout the year, that you don't necessarily pay taxes on the entire $1,000, okay? You only pay on your taxable income only, okay? Now, how you do that is you pay only on taxable income by dividing your total income into chunks, right? So I'm gonna go over things that can lower your tax liability, right? So your standard deduction, that's what we've been going over this whole time. It's automatically given based off your filing status. You can also, you can itemize your deductions. Now, you can't take both. You can't use the standard deduction and itemize your deductions, okay? Most people itemize their deductions. You see it a lot with married couples, but you know, if you're head of household or single, you still can itemize if your expenses exceed the standard deduction that's automatically given to you, okay? So for example, if you have like mortgage interest, charitable contributions, medical expenses, things like that. Now, let me just go back, and I want to stay here for a second because I want to explain something. A lot of people came to me this year and they're like, oh, well, my tax person said I couldn't add blah, like my student loan because it wouldn't count, or I couldn't add my daycare expenses because it wouldn't count, right? They said that. And what should have happened right then and there was the tax preparer should have basically, you know, explained in detail what they meant instead of saying that doesn't count. Because if you're somebody like me, or like the clients that have come to me, they're not going to just take that as a answer and then walk away. They're going to try to find a tax preparer that's going to put it on there for them. Okay. But if they had the knowledge and they knew, and the tax preparer did their job and explained what they meant, then they wouldn't have to look for somebody else. Okay, so I'm going to explain what they mean by that. Right here in the red, I put, it must be more than your standard deduction based off your filing status. Okay, so example, if your standard deduction, your head of household is $18,650, your expenses are $22,000, then you should itemize. So if you come to someone, you say, well, I paid $600 for the year for childcare, and I paid $400 in student loan interest. That's only $1,000 for the year. So would you rather subtract $18,000 off of your total income, or would you rather subtract only $1,000? It's not going to count. They're going to automatically give you the standard deduction because it's more. Okay, and you want that. That's a benefit for you, so you can pay less taxes. Would you rather pay, if you made $100,000, would you rather pay taxes on all of $100,000, or would you rather pay taxes on $81,000? You know what I'm saying? You save money by doing that. So that's why they give you the standard deduction automatically. Now, also, another thing that can lower your tax liability is your tax credits. Example, child tax credit. If your child is under the age of 17. Now, I know this, I don't know why they word it like this, like under 17. I guess they just, I mean, it does make sense under 17, but the number 17 there will confuse you. So they do have to be 16 and under. That would have been a better wording if you ask me, but whatever. They said under 17. The kid cannot be 17 by the end of the tax year of December 31st. Okay. So if you're going to claim these kids for your 2020 taxes by December 31st of this year, they cannot be 17 in order for you to take $2,000 per kid. Now, if they are, then you will get $500 per kid. They qualify as other dependents, or if you have like a grandparent or somebody else that you know you're taking care of, you would get $500 per kid per dependent for that. Okay, so this is my first time doing like a screen record. Okay, I had to do it this way instead of a traditional Instagram video because I didn't know how to do it otherwise, recording my screen. Also, I did want to give you like an example and kind of break it down a little more as best as I can so you can understand how taxes exactly work, because a lot of people just don't know. So if you're still here, thank you. We're going to dive right in. I'm going to use like this little whiteboard thing that I just found. First, I did it on here, but I'm going to do it. Let me see how I'm going to do it. Oh, this is not where I want to be. They had like a whiteboard. You know what? I'm just going to do it here. Okay, so let me move this over. Okay, so I'm just going to do it here like I did the other day. Just be patient with me, please. Okay, so we're going to use, I'm going to like draw it out exactly, and I need my calculator too. So I'm going to draw it out what taxes are, okay? So from here, the reason why I like that whiteboard better is because it let me text automatically. But I don't know how to find it. Where was the, I had the whiteboard. I don't know what happened to it. I don't know where it is. I lost it. This is my first time. Just be patient with me. I'm sorry. I don't know where it is. Okay, whatever. We're just going to do this. Okay, so we're going to text here. We're going to use an example. Let's use like a head of household filing status. Okay, that makes $65,000. Okay, she makes $65,000 for the year and has 2 kids. Okay, has 2 kids. Okay, that's the example we're going to use. Now, her total annual income is 65,000. Okay, so I'm going to draw this little chart here. Okay, so your income starts here, right? All right, so we know starts from 0, and we know up here we're going to do, she makes 65,000. Okay, now just like I said before, the standard deduction up here, if you can see this here, is 18,650. So let me write that here. Standard deduction amount is 18,650 for 2020. Okay, so I'm going to explain what exactly that means. So from 0 to 18,650, you're taxed as 0% because they're giving the first 18,650 of your income, they're marking that as non-taxable. So it's taxed at 0%, right? So we're gonna put that she's right here. Her first $18,650 is taxed at 0%. So her first 18,600 is and $50 is taxed at 0%, right? So let's just look at it just to like kind of explain it a little better. Let's look at it as her income starts here. At her income, literally like $18,651 is like saying 0, if that makes sense, okay? So I'm gonna show you the tax table, okay? The tax bracket chart. Now, you see here, we're looking at head of household. So you have the tax rates, these are the percentages, this is the amount of income, this is the chart, this is the filing status. So if you're head of household, single, married filing joint, and married filing separate, okay? So we're talking about head of household. So this first 10% tax rate says if she's head of household, from 0 to $14,100 is taxed at 10%. So remember I said that here, we're gonna look at this as starting at 0 because her first 18,000 is, taxed at 0. So we're gonna pretend like this is like a 0. We're starting from here. So it says that her first her first $14,100 is taxed at 10%. So how you figure that out is you come back here and we said, okay, pretend like this is 0. We're going to add up to $14,100. So we're going to add 18,650 plus $14,100. So that takes her income to the 32,750. That's where we are in her income, right? But remember, this gap here is only her first $14,100, and it's taxed at what we say 10%. Okay, so I'm gonna explain that again just in case it kind of went over. So remember I said the first 18,000 of her income is taxed at 0. So we're looking at this like we're starting from here. Like when you start from 0. So we're starting from here to here, because the chart said that a head of household to be taxed at 10%, it's the first 0 to $14,100. So from here to here will be technically her first $14,100, and that's taxed at 10%. So if you add that to this, we're here now, right? That's what we consider her first 14,000, right? So from here to here, now we need to find the difference from here to here, because we need to see her next tax bracket, which would be the 12%. Why would it be 12%? Okay, so it says here, her next $14,101 to $53,700 will be taxed at 12%, right? But if you notice the gap between here and here, right? You know what, let me see if I can pull this up like smaller next to here. Yep, that's what we needed to do. Okay. So if you notice from this to this, right? It said her next, basically her next between $14,100 to $53,700 is taxed at 12%, okay? Right here. So with that being said, that will exceed this. So if we do 65,000 minus 32,750, that's only $32,250 in between this gap, right? So right here, that would be 32,250. Even though it didn't max out, it's still in between this range. So we automatically know from here to here, she's going to be taxed at 12%. Okay. So with that being said, let me move this over because I need to type here. So with that being said, that will be her tax liability. So from here to here, so if we times the 14,100 times 10%, that will be $1,410, right? And then from here to here, 32,250 times 12%, that'll be $3,870, right? So right here in the red will be her total tax liability, right? So that plus that, if you add these two in the red together, her total tax liability is $5,280 off of a $65,000 annual income, okay? Now, remember I did say that things that lower your tax liability, so if we come back here, things that lower it will be standard deduction, itemized deductions, or tax credits, okay? So with that being said, she's not gonna itemize. We're just gonna say that she's gonna take the standard deduction, right? So she took it here, and then from here to here, this is what her liability is, right? I spelled this wrong. So from here to here, but she has credit. She has 2 kids. So, and let's just assume that they're under 17. So her 2 kids give her what? A $6,000 credit. I'm sorry, $4,000 credit because it's $200 per kid. So now if we put this with that, right? Minus, so we're gonna do the 5,280 minus her $4,000 child tax credits. Now her total liability is only the $1,280. Okay, so other ways you can lower this, she could have itemized and got her standard deduction over the 18,000, or she could just pay the IRS that, or she could have put into her retirement or took more out of her paycheck. And that's the video that I'm going to go over with the W-4 to ensure that you don't owe. But with this, we're just assuming that nothing, you know, this is just what she owes off of this income, okay? But the W-4, that's going to explain. But I just wanted to go over briefly exactly how taxes work, and I hope like this made sense. If not, I could try to explain it more, maybe on a one-on-one meeting, so that way you guys can like ask questions while I'm doing this, instead of it being pre-recorded, okay? So I just want to go over that and let you know, and then we could do another example. So that's someone with the 65,000 income, right? And I just want to show you guys, and this is why people are like, well, why does the low income get more money back? I'm going to explain that right now, okay? I wasn't even planning to do that in this video, but I'm going to do it right now. So let's just say we have a head of household, 17,000 income, okay? This is why they get more back. And let's say this person has 3 kids. So we're gonna say this person has 3 kids, same standard deduction, that doesn't change. And we said the income is 17,000. And we're gonna erase that. We're gonna erase all of this, right? We're gonna leave that the same. This is gonna be different, okay? This is why this goes like this, okay? This is why they owe, when low income people, when they don't make a lot, okay? Okay, just ignore this part for right now, but I'm gonna go over this right now. You know what? I could bring my chart back to where it was. Let me just make it smaller. It's not gonna work. Okay, so remember we said, how can I do this? Just gonna put it right here. All right. Okay, hopefully you guys can see that still. Alrighty, so I'm gonna go over it like this. This is what I'm gonna show you. Now, let's say there's somebody with 17,000 income, right? $17,000 income, but they took the standard deduction of 18,650. So we already said from here to here, they're not taxed. They have nothing else to go here. You know what I'm saying? They have nothing else to go here. So let's say their first 18,650 is not taxed, but they only made $17,000. That's why they end up getting all that money, because boom, their income is here. Their income is here, right? 17,000, right? Their income is here, okay? So from here to here, they pay nothing. They pay no taxes. There is no taxes that they pay. So their tax liability is zero. Not only that, the difference between 17,000 and 18,650, they get the $1,650, right? They gain this. So we might as well put this in green, okay? Right? They get that. And then plus they get 6,000 in child tax credits. Okay? So if you do 6,000 plus this, what do they get? $7,650. And that is why the low income gets a bigger check, because they have no tax liability. Does that make sense? That is why this is to answer the question to everybody. Why does somebody, This is how taxes work. This chart right here tells you why, okay? This tax bracket chart tells you why. From this to this, you're taxed at 10%. From this to this, you're taxed. They tell you, if this is how much you make, this is how much you tax. That's why people say, the more you make, the more taxes you pay. Now here, the less you make, the less taxes you pay. It's just the reality, you know? It sucks. It really does. I don't know if it sucks. I'm not going to say that. I'm not saying it sucks. I'm just telling you what it is, you know? This is the facts for you, okay? If you want to know how this works. Now, if we just erase this and said single, right, with no kids, this is why the single, because they don't have credits. So a single person or a married filing separate with the same income, they could still get this, you know? But let's say they made a little more. Let's say a single person, which they normally do. I've seen single people make way more than this because they have more time to work, I guess. Okay, their standard deduction is $12,400. Okay, now they don't have kids, so we're gonna get this out of here, right? They don't have kids. Now their income is 30,000, right? So the first, their standard deduction is only, so they only don't pay taxes on the first 12,600. Okay, you only don't pay taxes on the first 12,600. So single, oh, I'm sorry, is this 2020? I'm sorry. So only up to 9,875. Yes. So the first 12,400, they're not taxed. That's the standard deduction, right? Let me just double check, make sure I got it right. Yes, I was right. Okay. So that's taxes 0%. But then their income is 30,000. So if we put our chart back up here, the first 0 to 9,875, it's taxed at 10%. Okay. So remember I said we start from here, that's 0 plus the 9,875, that's 22,000. That takes them up on the chart. That's only to the 22,000. Sorry, I forget. 22,275. Okay. Now remember, this gap to here is 9,875. Tax. That's the first 9,000 of their income taxed at 10%. Okay. We still have to go because their income is 30,000, right? So from here to here, if we do 30,000 minus 22,275. Oh, minus 22,275. That's 7,725. Okay, so if you look here back at our chart, the next income is from 9,876 to 40,000, but it's not enough to go through there. So this will still be taxed. Wait, what was that amount right there? Yeah. They would be taxed at the 12% because it's not enough to go through there. But that is over the 987.6 of their income, right? So but you know what? I really don't know. I don't know if it would jump to the 12% or if because this is below, would it still be 12% or 10%? I don't know. I really don't know the answer. That's a good question because I really don't know. But let's just see what happens. And I can figure it out, and I will come back and confirm if I'm right or not, but we'll do both. That's 12%. So that's 927 if I did it at the 12%. Because this is only, I don't think we'll do this at 12%, honestly. I think this will only go 10%. If I'm not mistaken, forgive me if I'm wrong, but I don't think that would go to 12% because it's not even over the 9,000, you know? So I think it would still be taxed at 10%. So times 10%, that would be, what am I doing? So we can round it to 773, but same thing here. So you know what? Okay, so yeah, plus. So their total tax liability would be 1,760. But you know what? If they don't have anything to write this off, to get in here and, you know, and they weren't getting taxes taken out and all that, then that's why they would owe. That's why single always owes if they don't get taxes taken out or it's like self-employment or something like that. But you still can get earned income credit. You still can lower your tax liability with deductions. So you still have a chance as a single person. And you can ask my clients this year, how many single people did not owe this year because I utilized their deductions that they had, because they're single and don't have kids doesn't mean that they don't have expenses. Okay. So I think this is correct. I'm going to double check my work, but I believe that this will still be taxed at 10%. I don't think that it would jump because it's not even over this. So it would still be taxed at 10%. I believe I'm correct. So with that being said, this is, forgive me if I'm wrong. I don't think I'm wrong, but normally the computer does all this for you. But I am doing this because I want people to kind of understand how taxes work. What is standard deduction? What does this work? Da, 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 da. Like people just think, oh, automatically I'm in the 32% tax bracket because I make this much, but that's not how it works because you're not taxed on the entire amount, okay? You're not taxed on wherever I set it at. I don't know where I said it, but you're not taxed on the entire amount, okay? This is my first time putting a PowerPoint together. I hope you guys liked it. I hope you learned something. If you did, tell a friend. If not, just, you know, comment, DM me, call me, and tell me what you didn't understand. I will fix it. That will, and I will try to like get out a survey or something to people, because I do want to get feedback on this, because like I said, this is my first time doing this, and I think it's important to educate my clients as well as people that are following me on social media throughout the year, because I don't want it to be a situation where people just don't know. Like, a lot of people go to H&R Block and Liberty, and these people are not informing you of what is what, so you have no clue, and then you end up in these situations where you have no idea what to do, and it's like, wow, you know. So I want to do my best to keep you guys informed, and I am about to get the W4 video up. So with that being said, thank you for being here, and you guys have a wonderful day. Thanks. If we could stop the video. How do you stop it? Okay.